All right, let's just get right into it. The last 24 hours in the market, wow, they've been brutal. I mean, there's just red everywhere, a ton of fear. And so today we're going to put the DexFi protocol under the microscope, really stress test it, and see how it's holding up in this chaos.
Okay, but first, you know the drill. We've got to do the mandatory disclaimer. This is just for educational purposes, okay? It is not financial advice. Crypto is, as you can see, incredibly volatile, so you absolutely have to do your own research.
Look, before we even touch on DexFi, we have to set the stage. We've got to understand the environment we're in right now. And let's be clear, this isn't just a little dip. This is full-blown market capitulation, a real freefall.
I mean, just look at Bitcoin. It's our main market indicator, right? And it's down a staggering 50% from its all-time high. 50%! It's fallen down to around $64,000. ETF outflows are picking up speed, and you can just feel the pain everywhere.
And the sentiment? Oh man, it's just as dramatic. The fear and greed index? It's sitting at a 5. A 5. That is deep into extreme fear territory. And just to put that into perspective for you, that's even lower than what we saw during the COVID crash. This is just pure, unadulterated panic.
And what does that panic lead to? This. Over $2.7 billion in liquidations in just the last 24 hours. Think about that number. That's the single biggest liquidation event we've seen since the FTX collapse. It is an absolute bloodbath out there.
Okay, so with that as the backdrop, let's finally turn to DexFi. And look, I'm going to be brutally honest with you here. The fund has taken a hit. There's just no sense in sugarcoating it or pretending otherwise. Right now, the total fund value is sitting at about $1.37 million. And yeah, that's down 31% from its all-time high back in January. And you know what? That hurts to see. It does. But context here is absolutely everything.
So when you put the fund's performance right next to the big players, a really clear story starts to take shape. You've got Bitcoin down 50%. You've got Ethereum down over 60%. And since the DexFi fund is made up of these assets, of course its value is going to be tied to them. The key takeaway, the most important point is this. This is not a protocol failure. This is just the market being the market.
And you know, this brings me to the entire reason I'm making this today. Because while we have zero control over the price of Bitcoin or Ethereum, there is a core piece of this protocol, an engine, that we can and should focus on.
Let's talk about that yield engine. This mechanism, was literally designed for moments exactly like this. It's the part of the system that honestly could not care less about what the market price is doing.
So while the total portfolio value is down, get this. The protocol turned out over $8,000 in profit yesterday. And let me be crystal clear about this. We're talking real USDC, generated from actual, real trading fees. This isn't some inflationary token reward nonsense. It's pure, unadulterated, real yield.
And this just perfectly shows you the core concept, right? Market price is in the gutter, but the daily yield just keeps on coming. So why? Why is that? It's because the yield engine doesn't eat price, it eats volatility. And what do crashes create? They create chaos, they create panic, they create a massive surge in trading activity, which, you guess it, translates directly into more fees. And it gets even better. On top of that, almost $7,000 of that yield was automatically put right back to work, compounded back into the liquidity positions. Just stop and think about what that actually means. The protocol is basically dollar cost averaging for you. It's buying up more assets at these super low, heavily discounted crash prices.
Okay, so the internal mechanics, they're working like a Swiss watch. But what about the outside world? What about external validation? How are other people, other users reacting to this whole stress test? Well, the data here is, honestly, it's pretty astonishing.
Just look at this. Since late December, right through this entire market nosedive, over 14,500 new bonds have been minted. Remember, those bonds are a direct claim on the protocol's future yield. That's over $500,000 of fresh capital flowing into the protocol, while pretty much everyone else was hitting the panic sell button. I mean, what an incredible signal of high conviction.
And when you think about it, it makes perfect sense. The investors who really get the mechanics here, they see this for what it is, a massive opportunity. With the bond price down, the same amount of money today gets you 84% more bonds. And that means an 84% bigger claim on that daily real yield than you would have gotten just a few weeks ago. It's just smart math.
So the big question is, where is all this yield actually coming from?
The answer is simple, but it's really powerful. Trading volume. Volume is the absolute lifeblood of this entire system.
Today's volume hit almost $14 million. That is way above the recent average. And you can see it right here. The BNKR token pair just went nuclear, accounting for over $5 million of that volume all by itself. This is the perfect real-world example of how crash-induced volatility directly helps bondholders. It's a simple equation. More trading equals more fees.
Okay, so we've looked at all the data. We've gone through the good, the bad, and the ugly. What's the final verdict? How did the protocol actually do under this insane stress test?
Well, this health dashboard really tells the whole story. Every single metric that the protocol itself can actually control, solidly in the green. The daily yield, strong. The bond growth, absolutely phenomenal. The capital deployment rate, optimal. The only yellow flag on the board is the fund value, and we've already figured out why. It's being dragged down by the wider market crash. It's not an internal problem.
So it all comes down to this: $8,000 a day from real trading fees, generating real yield. While it feels like the rest of crypto is burning to the ground, DexFi's engine just keeps running. This is exactly what it was built for.
All right, and just to wrap things up, one final reminder, this has all been for educational and informational purposes. Investing in cryptocurrency carries a ton of risk, okay? Including the potential for a total loss of your investment. The fund's performance is tied to market conditions, and what happened in the past doesn't guarantee what will happen in the future. So please, always do your own research and invest responsibly.